Hello and welcome to Explain the Charts, where we break down complex market data into easy-to-understand analysis. Today we're focusing on NZDUSD, the New Zealand dollar versus the US dollar. First, let's start by looking at the current events that could be influencing the price. Recent news suggests a mixed outlook for NZDUSD, with some sources pointing towards a bearish trend while others remain more optimistic. The overall sentiment is cautiously bearish, given the recent downward pressure on the pair. Now, let's look at the daily chart to get a broader perspective of NZDUSD's price movements over the past few months. We can observe a significant price decrease from the highs seen earlier in the year. This downward trend is quite clear, showcasing the bearish sentiment that has been influencing the market. If we zoom in on the last month of the daily chart, we see a series of lower highs and lower lows confirming a bearish trend. The pair has broken below several key support levels, indicating the strength of the downtrend. In terms of key price levels, we should note the recent support around 0.60 and the resistance level around 0.62. Now let's switch to the 1-hour chart to analyze shorter-term price fluctuations. Here, we can identify more immediate support and resistance levels. Over the past few weeks, NZDUSD has consistently failed to break through the resistance level of 0.615, further supporting the overall bearish sentiment. The 15-minute chart will provide us with an even closer examination of the price movements and potential entry or exit points for short-term trades. We can observe that the price has been fluctuating within a relatively narrow range, indicating indecision amongst traders. In the short term, the price might continue to consolidate before making any significant breakouts. Looking at all three timeframes together, we can see that the overall sentiment remains cautiously bearish. The daily chart shows a clear downtrend, which is further reinforced by the 1-hour chart and is currently also present on the 15-minute timeframe. However, the short-term price action suggests consolidation, with traders possibly waiting for more clear signals before committing to either a bullish or bearish trade. In summary, the major key support is around 0.60 on the daily chart, while the key resistance hovers around 0.62. The likelihood of the price dropping to 0.60 is relatively high, especially if the current bearish sentiment continues and major economic indicators point towards further downward pressure on the New Zealand dollar. On the other hand, a breakout above 0.62 could potentially invalidate the bearish trend and open doors to further upside potential. However, this is less likely in the short term due to the current price action. We'll need to look for confirmation signals, such as significant volume changes, price breakouts above 0.615 or below 0.60, or other technical indicators, to better gauge whether the current bearish trend will continue or if a bullish reversal is coming.